Hello everyone, this is your host Vaibhav. I welcome all of you to today's session of Daily Stock, in which we are going to talk about the quarterly report for the second quarter of fiscal year 2024 of Qualcomm. It is flying high if you consider its share price value over last few months. It has almost doubled in a span of few months, and there are solid reasons for these astounding growth. I feel the Qualcomm whole as a company has grown efficient. Not only it is delivering more and more efficient chips, the company's operations have also grown better in a management environment, and that is helping the Qualcomm realize more valuations in the market. So we will consider its filings with the SEC for the second quarter, the quarter ending March 24. This is the balance sheet. First, we will take a look on its earnings income statement. Coming to the top line, if we consider these total revenues, the total revenues have grown just slightly. There is not much of an increase in the net revenues. There is growth in the equipment and services as well as licensing, but it's not that much. But what is interesting is the growth in the bottom line, and that is coming purely from the operational efficiencies. The company's cost of business is significantly lower this time around, and as a result of that, its net income has gone up from $1.7 billion to $2.3 billion. That amounts to growth of around 30 to more than 30 percentage point. This is quite remarkable when your revenues have grown only 1%, but still you have clocked these significant increase in the net income. Key contributing factors we will consider: the cost of revenue is more or less on the same side. The R&D is slightly higher. Then coming to the income tax expenses, these are also not much different. There is also gain from the investment, that is adding $330 million. So these are the factors which have contributed to this substantial growth in the net income. As a result of this high net profit, we have the EPS jumping to $2.03 in comparison to 1.53 cent a year back. In year-on-year terms, this is translating to around 35 percentage point growth. Let us see the cash flow statement to see where the cash is coming in from and how the company is spending its cash. The operating activities generated $6.5 billion. Out of that, $2.19 billion were spent for the investment activity. And then if we see this financing activity, that took away $3.6 billion. Here, the dividends paid are on the higher side in comparison to last year, but the repurchase and retirement of common stock, that is share buyback, is lower by around 600 million. The repayment of short-term debt is also on the lower side in comparison to last year. There was addition of the short-term debt, and then that was also repaid in the same quarter last year, but this time around that is only of 799 million. 799 million were raised from the short-term debt, that is the amount of inflow which is being offset by the repayment of the short-term debt. For the capital expenditure, there was outflow of $398 million, which is also significantly lower. in comparison to the last year. The purchase of debt and equity marketable securities is at US dollar 2.8 billion. So this is kind of an investment. This is the money which is being invested in debt and equity markets. This is not a spending. It's sort of a investment which is going to yield good results for the company in the coming quarters, coming years, depending on the time horizon these investments have been made. Overall, the company's cash positions look solid. Its cash and cash equivalents has gone up by $692 million. So its total cash and cash equivalent at the end of the period stand at $9.21 billion, which is a significant amount of money to have on hands for any unforeseen need, any emergency requirement, or for that matter, any day-to-day operational requirement. The company can choose to spend this money if the instance arises where there is immediate need of money. So this is one factor which is always paid attention to because it amounts to the liquidity position of the company, which needs to be in a good shape. Now let us turn our gaze to the technical side of the story. This is the Qualcomm stock price for last few months. After hovering closer to these 100 and 110 price band, the Qualcomm started to rally back in November 2023, and from there on, it has almost doubled in the valuations. So this is the journey, this is the growth story of the Qualcomm, which has unfolded over last few months. Looking at the price trajectory, I feel it is still going strong. If we have to make any decision regarding the investment or trade in the Qualcomm, I think the natural momentum is still bullish. The only question is what are the kind of price levels which we need to keep in mind while making the decision, and for that your time horizon becomes quite important. What is your outlook, whether you want to trade and invest for the short term, medium term, or for that matter long term, is equally important because depending on the time horizon, we can change the charting pattern and then make a assessment limited to that time outlook, time horizon. For the Qualcomm short term, in the short term, if your outlook is limited to next few days, I think it is better to go with the flow. There has been this bump in the price of the Qualcomm, but it is failing to sustain the momentum. It is still going sideways. There is lack of clear cut price momentum in a bearish or bullish way. It is simply going sideways, and I feel it is likely to spend in this consolidation phase the next week. So in that kind of environment, it is better for us to take advantage of the range rather than expecting any big move on either side. If you look at the price moves over the month of June and then in the first half of July, there was this steep decline from 230 to 190, and then there's a recovery which now seems to be losing steam. There is the strong momentum, but again it has started to show the signs of fatigue. And if over next few trading sessions, particularly on Monday and Tuesday, if there is no strong upward momentum, I feel in the second half of next week we are likely to see decline in the Qualcomm, which might get it back closer to this immediate swing low. So keeping that in mind, it is better for us to adopt a sell on rally approach, provided there is no sharp move on Monday or even on Tuesday beyond this immediate swing high of 210. Expanding the time horizon to medium term, I have changed the candle period to daily. In it, you can see that there has been strong rally starting from this 110 level. Now, after doubling the price over the span of 6 months, there has been sideways momentum for last couple of weeks. There was this consolidation phase for the price level closer to the 200, 210, and then there's one spurt on the higher side which failed to sustain, and we saw this equally sharp decline. Now on these levels close to 200, I feel the Qualcomm is likely to spend considerable amount of time because this consolidation phase is coming after a strong rally. So we don't really have to expect the big move happening anytime soon. It is more likely that Qualcomm will continue to consolidate. Its underlying momentum still remains bullish, but what we will need to do is pay attention to the immediate swing lows and swing highs. We had this immediate swing low closer to the 200 mark, and this time around also there has been support, the price support closer to this immediate swing low. And over next few weeks, if there is no sharp decline on the lower side and the Qualcomm continues to hover close to 200 220 price range, in a course of time, after a few weeks, we can indeed think about adopting a buy on dips approach and expecting it to move past immediate swing high of 230. But that is likely to take time, and we will do well to remain patient and wait for better times, better opportunity with a good risk reward ratio in our favor. In the long run, the Qualcomm is sitting on the very top. It had surpassed the prior swing high of 193 and made this new high of 230, and it is still trading above this prior price range, and I feel it is likely to spend more time closer to these immediate swing high. But we don't really get to invest at these levels. We can invest confidently only after due correction and consolidation. That is going to take time, maybe months, maybe a couple of quarters. So I feel if your outlook is for few months to few years, if you are trading or investing from the long term view, then you will have to wait, and that wait might be longer. I don't really see any immediate opportunity developing in the Qualcomm with a good risk reward ratio. That opportunity was there around 110 price level when it was hovering for a couple of quarters and it didn't really move on the lower side. That was the time to invest from the long term. Maybe we will have to wait for equally strong consolidation phase this time around also. Then we can invest with the confidence. The momentum is clearly bullish. The only thing which we are worried about is risk reward ratio. Apart from that, the things are still inclined on the bullish side, and that is why I am not really advising any contra trend trade to be taken in the Qualcomm over next few weeks or next few months. So that's it from my side for today's session of Daily Stock, in which we talked about the earnings report of the second quarter of fiscal year 2024, and afterwards we also saw its price action for different time horizons from short term to the very long term, and in all, it looks a promising company. The company's business is growing, it is getting more efficient. So all these things are favorable for investment, but the timing I feel is not that promising. Maybe we will have better times in future, and that is what we are going to wait it out for. Thank you all for joining in. If you have found the session informative and useful for your trading and investment purpose, do like and subscribe. You can also write to me the feedback to take the discussion forward. See you